All right, Matt, let's get you on here. Let's talk about Apple. The big tech company reports their numbers tomorrow after the closing bell in pure Apple fashion. So let's start off by covering what makes Apple such a big deal for the market.
Well, it's now the largest publicly traded stock in the world with a market cap of over $2.68 trillion, right? There's nothing else really compares to it in terms of that size. But on top of that, it is the number one component of the S&P 500. It makes up like 7.24% of that index's weight. It's the second largest component of the NASDAQ 100. And then it's also the 13th largest component of the Dow. So it's one of those stocks that, whenever it gets a cold, the rest of the market gets a sniffle. I'm sorry, my dogs just decided that they didn't want me to be in here by myself. So, that's one of the things that makes it so important, because it makes up such a huge percentage of these major indexes. Where Apple, it's one of those stocks that where Apple goes, the rest of the market tends to follow. And so, that's why we kind of have to pay attention to it, whether you're a fanboy or not.
The dog is like, ooh, Apple, treat time? Apple, did someone say? WALK? All right, well, Matt, we were just talking with CJ. CJ's also looking at some other tech stocks under the umbrella, like semiconductors. Did you see AMD today? That one is dropping. Are there any other tech stocks that are equally as important? Or does Apple just stand out on its own?
Well, for me, Apple is my number two stock to watch. My number one stock to follow to see like where the market is going to go is Microsoft. And that's because Microsoft is the largest component on the NASDAQ 100, makes up more than 13.4% of that index. The second largest component on the S&P 500, and then like the number three largest component on the Dow. So Microsoft is one of those companies that, definitely it's going to drag the rest of the market higher. On top of that, for 2023, Microsoft is also really involved in AI, which is the biggest trend in the market. It's got that major investment in OpenAI and ChatGPT. It's rolled that out into not only all of its retail products, but then also, all of its business products like Azure Cloud and all that kind of stuff. So Apple is my number two to watch in terms of direction. Microsoft is number three because Microsoft has a little bit more weight in dragging the market higher.
And who's number one?
Microsoft is number one. Microsoft is number one. Apple is number two. Yeah, Apple's number two. Apple's the second most important in my opinion. In my opinion.
Gotcha. All right. So we know the who, the what, the where. Let's get into the how, Matt. What strategies do you use when trading earnings like this? There's so many out there.
Yeah. So what I do is something called vertical analysis, earnings analysis, or VERT-EA. I showed you a chart earlier with Wingstop. And what it does is, this is an approach I've been sort of pioneering for the past couple of decades. And what it does is, instead of taking a linear approach to earnings, which a lot of Wall Street pays attention to, and a lot of financial media, what it actually does is focus on comparing apples to apples. So that's the crux of this approach.
I like
because
that.
For me, go ahead.
Yeah. VERT-EA. Just learning more about it. Tell me more, Matt.
Yeah. So what I mean by that, instead of like a linear approach, like you'll hear financial media and or a lot of other analysts talk about, like, company XYZ has missed our earnings or beat earnings for the last six, blah, 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 right? That's a linear trend. That doesn't show you, exactly what's going on. The reality is that companies, they have supply chain management they have to go through. They have, labor costs, they have, goods costs, they have manufacturing. There's these different consumer demands for their products. So it ends up being that you get this uneven pattern in revenue, and you get this uneven pattern in profits and profit margins. And so what happens is, you can, if you take a vertical approach, and that's what VERT-EA does, which is like looks at how a stock performs on every Q1 report, how the stock performs on every Q2 report, Q3, Q4. And when you do that, you start to see that there are these really significant trends that you can exploit, either to the upside or to the downside. I showed you earlier with Wingstop that, that company hasn't dropped on first quarter earnings since it's gone public. It hasn't dropped on second quarter earnings since it's gone public. That's something that you need to know if you're going to trade around earnings. And when you bring up Apple, if we can go ahead and bring up my screen share here, what you see is this trend on their second quarter report that tonight. The expectations, $92.9 billion in revenue, $1.45 in EPS. We have a whisper number, this is $1.47. So Wall Street is already expecting a beat. 60.7% of investors are expecting Apple to beat consensus. But what has happened over time is you see that Apple shares have fallen on second quarter earnings, 7 of the last 12 reports, and including more specifically, 6 of the last 8. That's a pretty important trend to kind of to take note of, especially as Apple is such a prominent piece of the S&P, the QQQ. We know that it's likely that Apple will drop. The bright side is a lot of those drops aren't significant. You've only had 2 really significant ones in recent memory. That was 2016 and 2022. Those were a little bit more than 3%. The rest of the time, you've kind of had these smaller gains, but that's something that Vert EA kind of showed you, right? This is the trend. This is what to expect. I'm not going to really buy calls here because the trend is that it's more to the downside than not. I don't need to really go crazy and buy any puts because a lot of the moves aren't significant. The one thing you also see from this chart is that when Apple does beat, right, those moves higher are pretty significant, right? There's only been one move in the last 12 years on second quarter earnings where the move wasn't more than 4%. So this is why I do Vert EA, and a lot of that has to do with the fact that we're talking that Apple's first quarter earnings, that's its best quarter of the year. That's where it reported $117.2 billion in sales. A lot of investors look at that drop from 117.2 to 92.9, which is the same pattern that takes place every year. Q2, third quarter revenue will also be lower than Q2, but they kind of get panicked about that, and so the share.
Very curious approach here. I like that it takes away from just the linear movement and looking more vertically, Vert EA, as you call it, Vert EA. I also find it trendier than my sunglasses, Matt. So it's pretty cool that you found a clever way to track these earnings. And like you said, Wingstop. I think this is the first time we've talked about Wingstop on the show. So it looks like this strategy has worked for you often.